All right. Hold on. Got it. Can everybody hear me okay? Yep. All right. So I'm gonna I've got a picture. I know you can see my face, but I've got a slide with my face on it, and I think that picture is better than the live one. And so I'm going to do that. Hold on one second. I'm going to put my slideshow on, and then where's the zoom? I'm going to share screen. Where are you? There we go. And so hopefully everybody can now see the pitch deck, which is not the picture of my face, but it's the title of the slide. I've literally only got a couple of slides, and then we're going to dive into Q&A. Here is the much better looking picture of my face. So I am Richard Howard. As per DNMA said, I work at AWS Startup Business Development Team. What does that mean? The business development team is a team mostly of former founders, myself included. Our job is to work with the early stage ecosystem of startups in the UK. My focus in particular is on, and it's been over the last 18 months to 2 years, is on the very early stage. So just founded startups, angel and the ecosystem that supports them. So angel investors, pre-seed funds, some accelerators and incubators and that kind of thing. Before AWS, I had a bit of a history in startups. So 2012, I was the first employee for Uber in the UK. So I launched that here. And then I went over to a Series A startup called Rentify, had just raised their Series A from Balderton, but they didn't have any commercials. So I basically led their commercial strategy until the CTO and I left to start our own startup. We went through Techstars London back in 2014, raised a seed round of just over $500,000 when that was a large amount. And I think that's going to be a large amount again. We're going back to the market cycles from 8 years ago. But ultimately we couldn't get the traction that we wanted. We got some users, but we couldn't get the ultimate traction that we wanted. And then I went over to a company called Teespring, which on the surface had the bona fide you'd want, right? Like it went through YC, had raised money from Andreessen Horowitz and Coastal Ventures. Keith Raboy was on the board, and you're like, oh my God, this is like a tier one. On the inside, it was not that case. I did all their BD for EMEA, stuck it out for about 16 months before realizing that I needed something with a bit more stability. My wife being pregnant with our second child, and I got the job at AWS, and I've been there ever since. Started out, as one of only a few people in the team globally with a very, very broad remit. And as the team has expanded and grown, I focused in on kind of where my interest and expertise lies. And also over the last 3 years, I think I've started to do a little bit of angel investing. So I've invested in about 10 or 11 companies now. Sadly, with the significant decline in the Amazon stock price, that is putting paid to my angel investing outgoings. But if that comes back, then I'll be back on track. So that's me. You can see me on LinkedIn and Twitter. I'd much prefer you follow me on Twitter. I have much fewer followers on Twitter than I have connections on LinkedIn, if I'm going to be honest. Obviously, you can connect to me on LinkedIn, but just follow me on Twitter too. Always try to build a profile and like every tweet I ever did. And then, so we're going to dive into acquired users into engagement. So it's going to be mostly a Q&A, I think, with Purdy and MA. But I wanted to just highlight a couple of things first. So most of you, if you haven't, should read the pretty famous blog post on getting product market fit from Rahul Vora, who's the CEO of Superhuman. It's on the first round blog. I can find a link to it and put it in the chat, but it's an incredibly useful tool of kind of how to find out if you've got product market fit. And rather than kind of like this ephemeral feeling there's actually kind of benchmarks. And so one of the things that they use is you should be asking your users, how disappointed would you be if our product went away tomorrow? And ultimately you want that number of disappointed users to be more than 40%. If you're sub 40% or you're at 40%, you don't have a very engaged user set. You don't have product market fit. You're not really got something. If you're over 40%, then you're onto a winner. And to be fair, you don't have to be hitting 100%. I think in the same study, they found that the people, they asked the question of early Slack users, and that number was 57%. And you look how big Slack's gotten. So it doesn't have to be, you're not necessarily aiming for the 80-90%, but it has to be above 40. That's kind of the threshold. And so just a quick list of do's and don'ts in terms of engaging your users. I believe that you should be starting small, right? You shouldn't be trying to be, doing a mega launch with your version 1 or your MVP. I believe you should be building out alpha beta groups. You should be talking to them constantly, all of the time. Like what's working, what's not working, what do you like, what do you not like, what do you want more of? Build for your customer needs, test, measure, iterate. Super simple stuff. Start small, find your niche, go really deep on it, grow out, expand from there. And the way that you're going to be building for or engaging your users is building for them, right? And kind of that goes to the don't, right? And so one of the things that you need to not do, and I see a lot of entrepreneurs do this, is they have an idea, then the market smacks them in the face with reality, and they continue on the path of what their original idea was, because you're not bullheaded, but we are entrepreneurs. I'm trying to think of the right politically correct phrase. It's difficult to change our mind, right? And ultimately, if the market is telling you that you're not engaging users with your product, but you keep pushing it because that was your original idea and you're stubborn, then you're going to lose, right? So listen to your users, listen to the people who are using your product, who you're building for, right? So you build for your customers, right? Don't build for yourself. And then on the don't side, don't wait forever to release a product or updates, right? You should be iterating constantly. You should be releasing V1s very early. Reid Hoffman has that saying: if you're not embarrassed of your MVP, then you've released it too late. The other thing is, don't mistake incentives for engagement, right? So I think this is very relevant, particularly if you're building something in the crypto space or the Web3 space, right? We've seen, crypto has crashed, right? A lot of companies that thought they had product market fit, that thought they had a lot of engaged users, were basically just providing yield to assets. And so, they were making people use their tools or their apps because people could get yield on assets, or they could get an airdrop or whatever. So it's very important not to mistake those kinds of incentives for engagement. Now, the other thing is that doesn't mean don't use incentives, right? But make sure you know what is incentive and what is engagement. So I'll give you an example from my days at Uber. The give 5, get 5, right? Which is where when you sign up to Uber, if you gave somebody your code and hadn't used Uber before, and they would get £5 off their first ride, you'd get £5 back. That was incredibly successful, but like a viral marketing network. Now everybody tries to do that now, but it worked ultimately because it was only for one ride for the new user. And so whilst it was an incentive, it wasn't what we were mistaking for engagement. We knew what was real and what wasn't. Don't try to be all things to all people. And then don't worry about losing users if they aren't the right fit for your product, right? Like I said, start small. And so I've spoken to a couple of entrepreneurs, Rahul Vora of Superhuman, one of them, and then Johnny Bufferhat of Hopin. Significantly, both of them had humongous waiting lists. And both of them culled the waiting lists aggressively of potential users who were not right for their company, who weren't the right market segment for what they were building. And so, because what would happen is they let all those people on, and then some people use the product, some aren't, and they're not engaged and all this stuff. And then, am I building the wrong stuff? And then you lose focus, right? So you can be very clear about the customers that you're building for, and you can be very aggressive if you want to about cutting out potential customers who you're not building for, to make sure that you can focus on the product and you can focus on that right specific customer set. And that's it. That's my list of do's and don'ts. I'll send a link in the chat for that Rahul Vora article. But yeah, let's dive in. I'm going to stop sharing, and then we can dive into the Q&A, I guess.
So first question I have is, let's say you're looking at one startup that's pre-rev ones and then the other one's revenue generating. What are going to be the different metrics that you look for that measure engagement at those two different stages?
So it totally depends on the type of startup, right? I don't think of it necessarily as like revenue generating versus not revenue generating, because, you could have, how long was it until Facebook was revenue generating, right? How big had they gotten? It is about what type of company you're building and kind of when you should be creating revenue. If you are building a B2C social app, I don't care necessarily about revenue. I care about traction. And that traction is DAUs, MAUs, engagement with the platform, the virality coefficient, all of those things. That's what matters to me, not necessarily revenue. If you are building a B2B SaaS platform that is hoping to engage the SMB market without traditional marketing, but kind of like customers are going to come to us and then they're going to download it or they're going to whatever. Then I'd like to see the traction. If you are building specifically for the enterprise, then your contract value is going to be high, but your sales cycle is going to be really long. So in that case, I might just look at your pipeline, right? Like I don't necessarily need to know that you have closed deals if you're building, big contract value deals. I just know that I want to know that, you're close or you've got a pipeline. And a pipeline isn't just, I've sent emails. It is like we are actively engaged in conversations with, X, Y, and Z enterprise. So, I look at it and I think every investor should look at it from a different perspective, depending on specifically what type of business you're building.
What do you think about startups who are in the early days putting like large companies, their logos under like a potential user or potential customer slide? I've heard mixed feedback on that. Is it useful, or do you think, why are people showing this to me?
You mean like not actually the customers?
Let's say they're in like their fifth conversation with I don't know, Google or Unilever.
No, look, shit. If I'm honest, like, to be frank,
if it's not signed, leave it off.
Like if you are showing me potential customers, like, no, that tells me you're not got any actual customers. Show me real, even if it's one, right? Like if we're talking about like companies the size of a Google or Amazon, one is humongous, right? But don't show me like when we get into a discussion, like if we're talking and we're having a talk, you can we can go through the pipeline and you can tell me where you are and kind of like, expected time of like signing contract, etc. That's totally fine. I would not put that on a pitch deck. Because then it looks like, I don't know, it just like pitch decks are for your actual traction.
Yeah, that makes sense. Do you have you ever spoken with a startup's users before, or customers, to hear their direct feedback?
Yeah, 100%. You need to. I mean, if you're like, so and I'll be, hold on, let me stop sharing my screen. So I have, but I don't lead deals, right? The lead of the deal definitely will. Okay. And if they're not, I mean, obviously we had a very crazy hot market for about 12 months. Mm-hmm. And so there were many times when the due diligence from investors was not as it should be. And so it's very possible that in that time, you could have gotten away with, even the lead investor in a seed round or a pre-seed round not speaking to customers just because it was a hot deal and they wanted to get it done. Nowadays, everything's going to take longer. The due diligence is going to be significantly deeper. And your investors are going to speak to your customers or your potential customers. I've done it, even though I don't lead deals. It's just because, I'm not doing it, like I'm not demanding it, and it depends on the company specifically. But the first couple of deals I did, I wanted to speak to customers because, it's super easy for you as the entrepreneur to be like, oh man, customers love us. And then I go to speak to the customer and like, oh yeah, we used it once, but I don't know, maybe we'll use it again. So I want to kind of get that validation. The one thing that Amazon has taught me that should have been a focus before, but wasn't a focus of mine, I was lax on it, was like customer obsession as like a focus, right? Like Amazon has these leadership principles and it's the first company I've worked at where they don't just talk, it's not just like a poster on a board and they don't just kind of talk about their leadership principles or their culture or their value. They actually they live them, because if when I hire, we're looking for, we've got specific questions to read, to list out those customer value, those leadership principles. When we promote, it's based on those leadership principles. When we want to do anything, it's based on these leadership principles. And they are like within the DNA of the company in a way that I've not seen. And one of those very, any Amazon CEO would tell you they're all equal, but they're not. Customer obsession is number one, right? If I can go and tell my manager that I'm doing this for customers, and whatever it happens to be, as long as I'm not saying, oh, I need a private jet for this, the chances of me being able to do that thing are really, really high. And if I tell them we're doing something wrong and it's negatively affecting customers, is going to get culled very, very quickly. And so what I'm looking for is a similar level of customer obsession that I would expect someone at Amazon to have, but it probably should be even higher because you should only have, your very early stage, 3 customers, right? And so you should be obsessing about how you are delivering for those customers and how you're going to deliver for the next 3 and the next 3 until it compounds exponentially. And so if I can speak to just a couple and just be like, or even just one, and just be like, hey, you know, what do you think of the product? And they're like, oh yeah, it's really, really good. And I was like, what do you think of like the last release? Like the update? Oh yeah, actually we asked for that and they did it really quickly. That's amazing. Awesome. And then if I go, you know, have you told anybody? Like, you know, whatever circle you're selling into is probably, you know, small industry at start. You told anybody like that you're using this tool? Oh yeah, actually I've told a couple of people. You know, that is just like alarm bells going off in my head that everything is kind of pointed in the right direction. You know, how often do you speak to the team? Oh, you know, they email us every like week or 2 weeks, just make sure we're doing okay. But I know that I've got the CEO's mobile number, and if anything goes wrong, I can call them. Again, like I'm not telling you that you should be doing that if you're like a scale up. But if you've got 3 SME customers, they should all have your mobile phone number, right? Let's be honest. They should be able to call you anytime.
Can I just ask, like, from a kind of customer love perspective, how do you demonstrate it before you get to the point of the conversation where you're talking to those people on the phone? Like, is there some way that someone could demonstrate it that gets you interested when you're just seeing their deck or in that very first conversation?
Yeah, I mean, so if you're a like number one, if you're in the deck, you can get customer quotes. You can get you know, like a CSAT score or whatever the equivalent is. But again, it's like, you know, you're a small cohort. So like you know, again, I'm thinking of like small B2B SaaS companies, right? I'm presuming a lot of the people of Hotbed are building kind of B2B networks. I wouldn't do the same for a B2C company. And so the way to get it in the deck is, you know, quotes from customers, a CSAT or like NRR, and just, you know, that's how you get it in. But ultimately, at least the lead investor, particularly in this market, is going to be doing their due diligence anyway. The like if I go back to so going to the B2C side, because I don't want to only focus on one area. So like I was an investor in a company called Dishbatch, which provides kind of like restaurant meal kits. They went through Entrepreneur First. They were actually Entrepreneur First's fastest growing business ever, and they raised their seed round. So I invested in their seed round out of EF, and about 6 months later, they raised $10 million or pounds from Andreessen Horowitz, right? And so like the growth is off the chart. I really liked them because they had a lot of repeat users. So they're a B2C company. They're the only B2C company I've ever built, not, you know, like a social media app I've ever invested in. They just had a huge number. Obviously, their growth was incredible, but a lot of like repeat business as well. And so if you're doing like a subscription market or anything similar, repeat business is showing me that you have customer love. And so that is a way to show investors without them ever speaking to a customer, hey, people really love us, and they love us so much, you know, they're ordering from us every week or every month or whatever it happens to be your kind of subscription cycle is.
For you, with the kind of wait list, like you said about Superhuman, is just a bunch of email addresses. Like, you know, you've got a landing page, people are typing in their email to say that they want to hear about the product once it's launched. Is that enough for you? And if it was a B2C, how many email addresses collected would you be like, okay, this is interesting?
It's a very good question, because it's kind of easy to fake the numbers. And as I said, with Superhuman, with Hopin, they got huge numbers on their waiting list, but then they culled like 60% of them, right? So would it be enough for me? I'd have to love the founder. I'd have to love the founders and love what they're building. But I could probably sell it to myself. Again, though, I don't like, I want to make clear, like, I'm not a leader. Like, I can commit and I give you, you know, a few £1,000s. You still need to get someone to give you the hundreds of thousands or the million, right? And I think in this market, if it's a really, really interesting product with a high viral coefficient, then possibly you could get the lead. My concern would be like, you know, I can commit, someone else can commit, other angels can commit, but you're going to need to convince the lead investor, right? And the lead investor is the one who puts in that biggest chunk and does all the negotiation with you. They're going to set the terms, they're going to set your valuation. And so you've got to think of it. When you're fundraising, you do it kind of in stages, right? In my opinion, you get like those early commitments. You get to like, unless you've got something great and you've got great relationships with VCs, and you go to VC and get your commitment straight away. You want to build like, you know, maybe you do a rolling close with seed legals. I know Anthony supports the program, and he's probably already spoken to you guys, or he's coming up. You know, so you get like a rolling close, get 100 grand, 50 grand, 100 grand, 150 grand, and then you can go to VCs and say, hey, man, we're closing $1 million. We've got a third committed or whatever, and we want someone to, you know, based on traditional valuation or like an ASA, whatever. So you always have to think about it kind of a little bit like, what is the lead going to want to do? And so I might be more open to being like, oh, these founders seem amazing. They're building something very cool. I'm happy to invest. Is that going to convince a lead a year ago? Sure. Now, maybe not so much, unless again it's super hot and we're talking 100,000 names on that email list. But also you should be letting some of them try the product first, right? So it's not just like we've got a hot email list. It's like we've got 100,000 on the wait list and we've got 1,500 or 2,000 or 3,000 who are actively using it, and they're using it again and again and again. And we're iterating so quickly on their feedback that they're loving the product.
We have a lot of startups in the cohort that are marketplaces. And so, especially like from your time at Uber, how do you prioritize? Like if you're pre-rev and you're just focused on like generating some form of engagement, how do you prioritize which side of the marketplace to focus on?
Always supply. Like that was the cry over, like more like supply. And the reason is, and obviously every marketplace is different. If you are, and I'll give you the example of Uber, right? And this is what Travis and Ryan Graves, who was, I guess, the CEO or VP of operations, whatever you want to call it, said, like, if somebody opens the app, and again, this is back in 2012, right? So a little bit, before everybody's kind of used to things like what we have now. If somebody opens the Uber app and they see that there are no cars on it, they might give you one more chance. They're not going to give you 5 more chances. If they give you yet one other chance and they open it and there's still no cars on it, they're not going to use it again. It's useless. It's rubbish. There's no cars, right? I'm going to go back to Addison Lee or Hail Black Cab or whatever it happens to be, right? If they open the app and they might not be looking for a car at that moment, but they open the app and they go, oh, shit, there's like 4 cars around me. All right, I will keep that in mind. Then you're okay, right? So you need to build out the supply side of your marketplace first, because if any consumer comes to your marketplace and you do not have what they want, the chances of them coming back in this hyper competitive market are slim. And so if you think about Airbnb, right? Like, I don't know if anybody's ever listened to the podcast that Brian Chesky's done with Reid Hoffman. He talks about, during the early days of YC, they would go and like take the photographs of people's apartments themselves, and because they were building their supply in the marketplace is significantly more important. Without it, your demand will wither, because people will come and they'll be like, oh, this doesn't have the things that I wanted. There's no rooms available. There's no cars. There's no whatever it is that you're selling. This is rubbish. I'll go to the next marketplace.
What, I had another question on there, but I have a follow-up on what you just said. How do you make sure then that you're still building something that will capture the demand sides, like interest and money, like that you're not just stockpiling supply and then all of a sudden the demand's not going to be there? Sure.
It's a very good question. It's one where it depends on the demand side. And I think, I wouldn't build the marketplace one-sided only, right? You should I would focus 80% of the time on supply, but you still want to make sure there is demand once you've got the supply there, right? So it's not like, I think there should be a relentless focus on the supply, but not to like, I'd say 80-20, right? 80-20 rule. 20% time on the demand. Make sure like, hey, if I'm building the supply, is the demand there? Because otherwise then you're just going to have a huge amount of supply and then they're going to wither away. So like I might have been like overly emphatic, but like without the supply, your marketplace will wither. But you should still make sure that there's demand for what you're trying to sell ultimately.
Okay. Okay, everyone, we have a few more questions and then we're going to move to Q&A from the chat. There's already loads of good questions in here.
Sorry, can I just jump in and ask the one about B2B2C whilst we're talking about different business models and how to focus, because there was a question in the chat about starting small when you're B2B2C. Reza, I don't know whether you want to give any more context to this, but it says here, the users are only interested in content and the business that will supply the content wants to see users. So how do you deal with kind of that when you're in a beta situation?
So I was going to really clear. So if you're B2B2C, it's so difficult to start small. The users are only interested in content and the business that will supply the content wants to see users. You're absolutely right. So actually the company that I built was B2B2C. It was called Shortcut. And we allowed people to order food and drink and merchandise and whatever in live event venues. And so, you could go to a football game and order your food and drink. You could go to a concert and order your food and drink or your merchandise without having to leave your seat, without having to queue up, all that stuff. And so we could not get access to the consumers without getting access to the live event venues first, right? So we had to go through the B2B before we could get to the C. And it is very hard. You're absolutely right. It is hard to start small. And so ultimately, we didn't make it. We did get some traction. So we worked at MK Dons and QPR, Durham County Cricket Club, in terms of the live event venues. And we had a lot of in the pipeline where we were having like goodish conversations with. So depending on the size of your, I'm not entirely sure what business it is you're doing and kind of the sizes of the businesses you have to sell into before you kind of get to the consumer. But you would want to start making sure that you're getting traction there first, because that's where we fell down, right? We weren't getting quick enough traction with the large events. And even once we were in the venues, like we had multiple problems, right? Like the 4G, no, this was back in 2014, not everybody had 4G phones, right? So like you've got 50,000 people picking off one cell tower, nobody's getting connection to order your food. And so for us, it would be much better if we had started smaller, just did one stadium, right? We're just taking one live event venue, one stadium, and we're going to figure out all the problems. Why are people not using it in here? And then if we could go to the other event venues and we could say, hey, we're at MK Dons or QPR or whatever, and we've got X humongous % of penetration, and look at how happy our users are and look how happy QPR is, it probably would have been better for our business rather than trying to go broader and just get as many stadium on as quickly as we possibly could, if I'm honest. I don't know how relatable that is to your business. I'm not obviously not familiar with your business, Reza, but for us, because here's the thing, right? We're starting small with one stadium, and stadiums aren't small as they service 50,000 or 40,000 potential consumers on any given event. But it's much easier to concentrate within that one venue than it is trying to spread yourself across 3, 4, or 5. And I imagine it's probably similar to your business, but again, without the context, I'm not 100% sure.
Reza, do you have anything you wanted to add quick, and then we'll move on? Yeah, okay, go ahead and take yourself off mute.
Yeah, hi. We're basically going to do a sustainable marketplace for sustainable products. But also the other big problem is internet. Internet is global, and you don't know where you're actually, once you put content on it's actually an app, but once you put something on the app, it basically is a global market. And you don't know actually where your attraction is. Your example actually is quite a good example, because you could have been specific, but actually with anything that goes on the net, you're going global. And hence the whole problem is actually gets exaggerated.
So I'm a little bit unsure of the business, because you said it was a marketplace first.
Yeah, it's a marketplace for sustainable products.
Okay.
On an app for a marketplace on sustainable products.
But do you mean so people can buy sustainable products, right? And then other people can sell, right? So it's like a two-sided marketplace.
They can link. Users can actually, businesses can post their content on the platform, and then basically users can link directly to the businesses and actually buy directly from them. Okay,
so can't you restrict geographically your user base, right? Like you could be in the app store in only specific countries if it's an app.
But the problem is if somebody links from, let's say, United States, what do you do then? If you're basically suddenly you get attraction in United States.
Yeah.
You basically cut yourself off. Cut your.
Maybe I'm not fully on. Like maybe we can take this offline. I don't think I fully comprehend what it is that you're building. Like if you've got a marketplace and you're just the marketplace, right? If somebody is uploading content and selling stuff from the US and somebody else wants to buy it from them,
yeah.
What is the number one? It's not really B2B to C, right? You're just a marketplace, but also I'm not entirely sure what the problem is. If this seller wants to sell something and this buyer wants to buy something and you're the marketplace and you're taking the fee, why does it matter where they are?
No, but the problem is that unless there's content, you're saying concentrate in one location.
Okay.
The whole thing is it's difficult to concentrate on location exactly for the reason that you said.
Yeah.
Is that so that's a problem. But it's just to get enough content. People have now become very savvy about, great idea, but we need how many users do you have? We need at least, 10,000 users per month before we sign up. We don't have the
Yeah,
time.
sorry, I'm just going to jump in quick. Let's save this since I think there's a bit more context needed until the end if we have a few more minutes.
Okay.
But I want to get through a few more questions. So the last question I had for you, Richard, before we'll go to more Q&A is what are vanity metrics in your mind? What are metrics that founders focus on that when you see on decks, you don't really care about?
It's a good question. I would say that the decks that I've seen, founders have got much better at not having vanity metrics anymore. And so again, it depends on the type of business. I think so I did mention, I would say one that you could mention before, Amy, is like potential customers, right? Like I don't care. Or I don't want to know how big I don't necessarily want to know how big your pipeline is on the deck. We can talk about it in the meeting, absolutely, but don't tell me about it in the deck. Tell me what you've actually closed in the deck. I think sometimes, and this isn't always the case, but you can, what happens sometimes when you dig deep, like, oh, we've got, maybe we're starting small, we've got 5 SME customers, but you don't tell me what the MRR is, right? So, so like you can tell quite quickly when an entrepreneur is trying to cover up for bad numbers by switching out a number that looks slightly better, right? We've got 10 customers who are each £6 million businesses and etc. And you go, all right, well, how much are they paying you? Oh, $50 a month. You're like, oh, okay, not that great. But I think, look, as entrepreneurs are savvier, investors are getting savvier. And so I've seen a lot fewer bad metrics in decks over the last, I guess, 18 months. And so I would just be like, look, if you are small, do not work, you're going for a small amount of investment from people who are experienced early stage investors. And so don't try and pretty up your metrics because you will be found out very quickly and then you will lose trust very quickly. If you are, show me, your MRR, your ARR, show me what your growth percentage is, show me what your churn is. Don't show me on the deck, at least don't show me the pipeline, show me closed deals. If you want to show me, if you do have a big waiting list, you can mention it, but I'm going to discount 2/3 of those as not relevant potential users. So show me what the actual users are doing, because if you've got that waiting list, as I said, you should also be letting some people on the alpha, right? If you've got 1,500 people on the alpha, what are they doing with it? How often are they checking in? How often are they logging in? What are they doing? So that kind of thing, I would say.
One quick question from me. Let's say so the cohort last week, they should have been acquiring a bunch of new users. So let's say that all of them now have some brand new users that they only acquired last week. Yep. What tips do you have to turn those acquired users into engaged users? And if you can, a kind of B2C example and a B2B example.
Sure. So the first thing I would say is basically you should be living in those people's houses, right? You should know their hopes and dreams and fears for what they want to use your product for. And so, that is, I'll give the B2B example, right? First, you should know why, you obviously in your head, you have the idea of why your product is going to be useful to them, right? But the reality is often not the same as, your fantasy. And so you should know exactly how they are using your product, exactly what they want it to do and what it's not doing right now and what it should be doing and all those things. You should be without taking up too much of their time, you should be basically sitting on their lap, figuring out how they're using the product and how it's making their life better. Or if it's not doing the things that you promised it would do, how annoyed are they getting, right? You should be there all the time. How do you turn them into engaged users? It's the stuff I said at the beginning, right? Constant communication. When they tell you they want something, build it, iterate super fast, right? Especially if it's something you wanted to build anyway and other users are asking for, build it. Just do that thing. And then they're like, oh shit, I asked for this thing and now it's there. That's unbelievable. They can't get that with Slack. They can't get that with their CRM. Those products are far too big, right? Your team is small enough. Your customer cohort is small enough that if they want something, they're asking you and you think it's a relevant product change, make them like delighted, make them love it. And so, yeah, you should be like knowing their pain from the get-go. Sorry. And then on the B2C side, it's kind of similar, right? Like the B2C side is more about network effects, right? So it is, are you providing me a delightful experience? Can I tell my friends about this? Am I bringing friends on board? All that kind of stuff. How do I turn you to engagement? It's similar, right? Like, oh, I wanted this thing and now this thing is there. Like, talk to me. Like, be talking to your users at all times. Another thing I would say is, you know, as Purdy mentioned, you guys have acquired, you know, however many users you acquired in the last week. Don't be afraid to cull that number somewhat if they are not the right users for your product, okay? Otherwise, it's going to be super confusing. You're going to be led in like a merry-go-round, like away from what you actually should be building and who you should be focusing on, and it's going to be incredibly distracting. And so, you know, if you have acquired 10 users in the last week, that's amazing if they're the right users. But if 7 of them are the wrong users, like, again, that's a vanity metric, right? We've acquired 10 users in the last week. Amazing. 7 of them aren't the right ones for us, but we've got them. Who cares, right? Acquire 3 of the right users. It's much better. You're going to build a much better product. You're going to be able to grow and scale much faster. You're going to figure out what your real core users actually want and build for them much sooner.
All right. I think we're ready to move to questions.
Someone's actually asked, I think, like, if you're just collecting email addresses, how do you know whether they're the right users or not? You know, how can you cut that number down? You need to collect more information.
Talk them
Yeah,
on
you need to get
LinkedIn.
more information.
Yeah.
So I'll give you the Hopin example. So Johnny Bufferhat, CEO of Hopin, basically made them fill in a form, right? And so all they did was they deleted, or they didn't allow Hopin access to anybody who wasn't an event organizer. So there's a bunch of people like who create, you know, they wanted, oh, I wanted like use Hopin to like chat with my friends, or I want to use it for like for my business, etc. And you know, my business conferencing or whatever. And their specific niche was event organizers. So they get rid of tens of thousands of people in the thing. So like, you know, I don't know necessarily that just email addresses is going to get you anywhere, but email addresses and like, you know, who you are, what your job is, and what you want to use X product for is going to be able to help you cull the list.
Okay, Ajit, you are up.
Hi, Richard. I have 2 questions.
Sure.
2 quick questions. The first one is, a list of best practices for B2C communication with users. You said B2C founders should be obsessed with B2C consumers, but best practices, from best practices point of view, any top 3 that you have seen across the board?
I guess it depends what the B2C app is like. So you know, you've got Facebook on social media, like side one thing. You've got like Dishbatch, the company that I mentioned, the other side, right, where it's more of like a subscription basis, but it is direct.
Say B2C B2C fintech in money management, personal finance space.
Okay.
If I be more specific.
And then, so what is it like? Are the users like nascent banking users? Are they like millennials? And so they're millennials, and you're making your money from like transaction fees, or is it just like a bank account, or is there anything specifically new compared to like a Monzo or a Revolut?
Something similar to Monzo Revolut, for example.
Okay, and then so like I've not worked in that space myself, but I'd say like the top 3 things you want to do is look at their engagement with your app. Like, how many people are engaged with your app? How many people are putting actual money? Like, I'm assuming it's like a current account type thing. How many people are putting actual money, their current accounts, into your app? Then their actual current accounts you're not going to get yet, right? Even Revolut and Monzo, that is their ultimate goal, right? They want people's salary being paid into them, and they're much lower than you would expect. But how many people are using your account? Like, what is the number one thing you use them for? Like, so for example, I use Revolut for foreign exchange transactions. I think I get the best rates. They don't get my salary payment. Maybe they will one day. But you know, I use them for FX, and then I've used them for a bunch of other stuff since. What is your one hook that is better than Revolut or Monzo or anybody else that you're going to get people in, right? Concentrate on that hook, and then you concentrate on how you're going to grow from there. Because if you're just copying a Monzo, a Starling, a Revolut, then, you're a few years behind and hundreds of millions, behind in terms of like fundraising. And so I would ask, like, what is it that what is your one thing or your two things you're specifically going to hook people on, like that's really going to be differentiated? And then how are you growing that? Like, how many people are using that? How many people are using that week on week, right? How often are the people that are using that? How often are they using it? Do you have like invite codes so you can see how virally it's going, right? Oh, you're using it. By the way, here's your invite code. Send it to 10 friends. Okay. Are they sending it? Are those friends using it? All of those kinds of things I would want to see. I don't have like a full list, but like, if I was an investor, that'd be my question to you. All right, you're building a finance app based on millennials or like targeting millennials. It's kind of like obviously we've spoken for about 30 seconds. It's kind of like Revolut or Monzo. How is it different? Why is it better? And then that thing that you're telling me is better, how much are people using that thing that's better? How much money are they putting into the system? And I'm not worried about your revenue, right? Like, I'm not worried about your revenue per user. If you're actually going to create a new bank or whatever it happens to be, you've got time for that, but you should have that one thing or two things that are significantly better than how Revolut, Monzo, Starling, etc. execute it. And maybe it is that it's just focused on a completely different market. They're focused on Europe. I'm focused on Sub-Saharan Africa, or I'm focused on LATAM, or whatever it happens to be. But you need something that's compellingly good to those first users in.
Right. And the second part of the question, can I ask the second part of the question, Em?
Go for it. Yeah.
So, and the second part of the question is, you mentioned about culling the list, like basically focusing on the right initial users and eliminating the others. So with a lot of other startups, I have read and heard that the initial cohort also gives them an idea of who the right customer is, like basically the right customer discovery. So there are startups who thought that their product would meet the needs of a particular kind of users, but it ended up actually meeting the needs of other people. So how do you determine that if somebody is to start with a closed mind and actually struggle with it and eliminate the other part which they initially thought may not work, but actually could have worked?
So it depends. And as with every answer, it depends. Like, how big is that other potential market, right? So like so I would look at this. It's a difficult question to ask because there's a bunch of different ways you can look at it, right? So from my experience, I would say the ultimate thing you're trying to do is solve a problem, okay? And you're trying to solve a problem for a specific group of people that you have determined is large enough to support a significantly large business. Now, V1 of the product, for whatever reason, is not solving the problem for that cohort of users, but is actually solving maybe a different problem for a different cohort of users. And so you look at that different cohort of users and you say, is that cohort bigger than that cohort? Is it so big that actually I should focus on them instead? Or is it just that despite my best intentions, V1 was not up to standard and I still want to solve the problem for that initial cohort, I just did it wrong? And so it's a question of kind of market sizing, market timing, and so there's no right answer, right? Like, Slack started as a video. Like, pivots are very common within startups. And so if you think it's the right time to pivot and you've got data to back you up, go for it. Nobody's going to tell you you're wrong. It's important to be flexible, but I think the way that you can determine that somewhat is, all right, so I thought I was fixing the problem for them. Actually, I'm fixing the problem for them. How big is this market? How engaged are they with this? Oh shit, they're really, really engaged and the market is quite big. I'll go for it. Amazing. Or I solved it. It's a one-time thing for them and, they might never use it again. It's my market anyway. Well, there you go. All right, I'm still trying to solve this problem. I just did it wrong the first time. And there's no right answer. It's so circumstantial that it really depends on what you're going through. But look, pivots are fine. Like, it's expected within startups. Make sure you're pivoting into the right thing though. And so like doing your market sizing and customer discovery and et cetera is super important.
Thank you.
Thanks. Okay, so we've got 10 minutes left. So we're going to try and get through 2 to 3 live pitches. What we're looking for is the problem that you're solving, what your solution is, and any early traction that you've got. And Richard will give you a bit of feedback in terms of whether he understands problem, solution, traction. And then Richard, if you would be interested in like a follow-up meeting based on what you've heard, which won't be the whole pitch, obviously, and any feedback that you've got. So if you're interested in pitching, can you just raise your hand? And then we'll try and get through 3 if we can. So we've got Ludovica, Rashid, and Daniel. So we'll take you 3. Ludovica, do you want to go first?
Yeah, absolutely. Hi, everybody. Very interesting session. With Reveal My Food, we are a software for the hospitality sector that aims to improve the profit out of ingredients. Our software serves 150 restaurants at the moment to analyze their ingredients and recipes for allergens, nutritional value, and health claims, and transform everything in a digital menu that increases SEO attraction and personalization for all the diners with dietary requirements or interests as 62% of the population for what is served whenever they eat out. Yeah.
All right. So that's actually personally interesting to me because my middle son is celiac. So whenever we go to a restaurant, we need to always get specifically gluten-free food or the gluten-free menu. And he's a picky eater as a 5-year-old anyway. And so it's super limited in places that we can go. So look, I can see that necessarily interesting to me. I'm not the whole market. What I'd love to know is, what's the feedback from the restaurants like, and are you charging them for this, and how, if so, how much, and kind of what's your turn on that, right? Because from what, again, single user, don't need to take my, like, I haven't seen, there's a fair few restaurants go in and go, oh, do you have anything gluten-free? There's like, no. And so with the big chains, the Pizza Expresses, the Prezzos, they'll often cater, but the independent restaurants, or even one with maybe 2 stores, don't have the capabilities to do so.
So first of all, I'm a public health nutritionist, and based on the data, you are like 20% of the population that is trying to exclude certain ingredients because of allergies or dietary requirements. So it's quite common, and it is only going to increase, and we're going to get more and more familiar with that. In terms of business model, yes, we charge restaurants. It's based on the number of employees that they have, because that's a good mark for the size of the restaurant. At this moment in time is a recurring fee that start with £49 and increase to around £1,000 depending on the size of the venue. And it's for the group, it's not for the single venue. So even when they are charged £1,000, is divided across 5 to 10 different venues. In terms of what you're saying regarding the small independent restaurant not being able to serve you, actually, most of the time is exactly the opposite. But the small restaurants do not understand what is the value of their ingredients, in the sense that they buy the ingredients, they stored and they serve the ingredients, and they never analyze that for what are the total allergens that are processed in the kitchen, and so how high is the risk of cross-contamination, or perhaps what is the health value of the dish served. And so with our technology, we increase by 79% the data point for every single dish, and these information are displayed on the digital menu, so you can filter it and you can effectively find not only the dish but the ingredients information, so you can ask further information and be sure that what is served is correct. And the way
I'm just going to cut you off just because we want to try and get through the other 2 pictures as well if possible.
Can
Richard,
I just add the last thing? Sorry. The point of that is that we have a CRM software that connects the personalization. You add the filter and the restaurant receive that, so they can send you promotion based on your dietary requirements. Thank you, Pardon, for the extra 5 seconds.
Richard, any quick feedback based on that?
Yeah, I mean, look, so like I obviously have like a personal like viewpoint because it's affected my family. my initial thing is how big can you get if that is, if kind of like the allergen and splitting stuff is your focus. I don't know the size of the market, but I know a couple of businesses that have gone into the kitchen space and they've got to a certain size, but maybe not being able to kind of get over that hump of size. It might be interesting to focus on kind of dark kitchens specifically. Obviously, that's a growth area. And the other thing might be interesting to go in as a route through insurance companies, right? Insurance companies have to cover restaurants. I guess the biggest claim will be if somebody, has a severe nut allergy and they get poisoned or whatever, and then, the restaurant is sued. And so as part of their insurance cover, they might have to use your product. It might be an interesting kind of route to market, just something to think about.
Thank you very much for the feedback. I will consider the insurance for sure. Thank you.
Rashid, do you want to go ahead?
Hey, can you hear me?
Yep.
Yeah. Hi, my name is Rashid. I'm one of the co-founders at Roam, and at Roam we're automating mobility for businesses. So in the world every day there's around 200 million vehicles trying to go from A to B to provide their services. So distributors, couriers, delivery companies, and much more. But the problem is it's extremely hard to run a fleet, especially at scale. And because of that, they always go through burdens. So a lot of the companies use Excel to run their fleet operations. They have all their drivers on WhatsApp groups, and when something goes wrong, they have to call third parties to help them solve the problems. And that results in slower operations, the service is affected, and scaling is really hard for any company that whose service relies on a fleet of vehicles. So we thought, okay, what if we helped fleets operate more like robots and not like humans? So we built Roam. So Roam automates mobility for businesses by giving them the tools to manage, grow, and support their fleet operations. So they can set tasks, see where the drivers are, communicate with the drivers directly on the platform. And during operation, if something goes wrong, we actually go there to help them with the problems. So removing all the burdens in growing the company and running a fleet at the same time, so they can just focus on that, and then we take that away from them. So we explain it's like what Stripe done for payments is what we try to do for mobility. So create an ecosystem for mobility. And at the moment, our business model, we charge per vehicle, and we also charge for the support side of the service, which is the logistical side of it. So if a company needs to move 300 vehicles to another location, we do that for them. If they need new drivers, we do that for them. And the mission is to create one platform that becomes an ecosystem for everything a company needs to run their fleets. Start a fleet, so acquire vehicles, put their drivers, manage their vehicles, and if they need to move it, they can do it on there. If they need to get insurance, they can do it on the platform and just stay in one place, because at the moment everything is disconnected. The team at the moment is myself, the co-founder, Tom, who's ex-Shell. We've got BT fleet managers, ex-BT fleet managers who work with us, and also developers that build banking infrastructures for Yapoli and Monzo. And yeah, that's our short pitch.
I mean, it makes sense. Fleet management is obviously like a big issue for large companies, where particularly ones where they have to do things with people in vans typically. It's not a market that I'm super knowledgeable about, but I'm sure you could tell me the size of the market in the UK if I asked you. I'm sure it's pretty big. The one thing I'd say is just on your, and obviously we're limited on time, you're trying to get everything out as possible. Be a little bit more focused, right? Like tell me what you're doing, why you're doing it. Like I get that in the future you'll be able to offer insurance and help people move from this to that. Just be like, this is what we're doing, this is why we're doing it. Market is this big, and this is the traction we've got. Because I'm not an expert on it, but fleet management software is, I understand it quite quickly. We're helping companies with a fleet of X from 10 to 1,000 vehicles, or is it small? So just give me if you're pitching someone, you've only got a limited amount of time, give them the key points, and then I can dive in with further questions about, all right, what is it in 2 years? What is it in 3 years? And then you're like, oh, we're ultimately like the everything app for fleet managers. But yeah, like it makes sense. Sounds cool. My first hunch is that you're probably not the first company to do it. So I feel like there's probably like a pretty competitive landscape out there. And if I was to dive in, it would be like, where's your differentiation? But like, again, without knowing that off the top of my head, without looking at your pitch deck, on top of my head, sounds interesting.
You have like 2 minutes or so we can quickly go through Daniel.
Oh, cool.
Richard as well.
Should we go through what, sorry?
Till we go through Daniel's pitch as well. Have you got, because it's 12 o'clock, if you've got a few minutes, yeah.
Yeah. Let's go.
Thank you, Richard. Really appreciate it. So, hi, I'm Daniel, co-founder of Cowder. We're the world's first LGBTQ plus mental wellbeing app, serving a £24 billion market and over 370 million people in the community. So the number of people in the community, 370 million who are economically active right now. But did you know that over 50% will experience depression every single year? And they struggle to find relevant and affordable ways of supporting their mental health. So the problems that exist are we've got long waiting times, we've got the cost of private therapy being too expensive, and 1 in 4 people in the community will experience discrimination from healthcare staff. So the community is disproportionately affected by mental health issues, 3 times more likely to experience a mental health issue than the general population, and disproportionately discriminated against when accessing mental health support. So Cowder, we provide video therapy courses, live group therapy, and daily well-being activities, all in a mobile app. We're a monthly subscription service providing access to a library of content, which is for us a scalable way of providing low cost and relevant mental health support that actually speaks to the community. We launched an alpha at the beginning of the year. We grew to 400 users with a 5% conversion to paid users. We were able to establish quite an early LTV CAC of 3. And 2 weeks ago, we just launched a beta app. We've now grown within a week to over 500 users with over 100 premium users. And so now we're looking to prepare a fundraise so that we can scale our content very quickly over the next 12 months.
Okay. Very cool. I mean, so funny enough, I worked relatively closely with the guys. I don't know if you've come across them. Like, they're called Lavender Health now. It used to be Troglow.
Yeah.
And when they were in Techstars and a little bit afterwards, and they obviously raised from Octopus. So obviously that was more sexual health than mental health. Mm-hmm. But obviously the market for LGBTQ plus is not small. And so it's all right, well, how are we making sure that we're serving our niche? I would be, so on the pitch, I get it, makes sense, I get it straight away. I would be, so my first question that in my head when you were speaking was, well, how much more is it than, for the general population? And I think it was, I think a couple minutes, so you said 50%, and I don't know what the number is for the general pop. And so it'd be good if you said when you said that 50%, which is 3 times more than for everybody else. It makes it it immediately makes it rather than kind of coming later, right? Just when you're delivering it. I think also it used to be called the pink pound, that market. And so talking about the size of the market for, specific LGBTQ plus apps or services is obviously, this is a 1-minute pitch. I don't expect like a history, but it's worth commenting on, because most of the people that you're going to be pitching are not going to be part of that community realistically. And so it makes sense that you can kind of spell, but what they do understand is numbers, right? So it will make sense to spell out the size of the opportunity in the size of this community. They will also be the people that on their Twitter profiles will be they'll have the pride flag and they'll have all this shit, but they will never, knowingly support a gay founder or whatever. it is what it is. But you just have to like be realistic with who you're pitching and what their knowledge of your market is going to be before you go in. And then you can go in as a place, like not to lecture them, but to excite them about the size of the opportunity. All right. And you go in and be like, this is why it's important, but also this is how fucking big the market is and how rich these people are, because typically they don't have kids at the ages of 30 or 40 or whatever, and so their excess spending ability is significantly above those of straight people, like this idiot who is married, has 3 kids, and has no spare cash for mental health apps. And so as you look at, I think it's just like, I get it, makes sense. I knew the Lavender Health guys, and so it's just like, all right, understand who you're going to pitch, make sure that you are exciting them about the size and the potential of the market, why it's important to focus specifically on LGBTQ plus mental health rather than just developing a generalized mental health app, right? Why is this different? Why should I care? Why can't they just use X, Y, and Z mental health app that's already out there? So you can talk about why they don't cater for this demographic and things like that, and why you do. And if you can show, it doesn't have to be necessary numbers, but maybe in anecdotes. Some of our users were using whatever, and I don't know what it is, but whatever the number one leader in mental health apps is, and they actually came over to us because we catered more for them than that did. And that was too generalist.
That's epic. Yeah, no, those are really, really good points, especially bringing up the kind of the market opportunity really, really, really early on. And the pink pound. Yeah, it's very true.
I don't think it's called that anymore. I think I'm just showing my age, but you know what I mean? It's like, ultimately the investors have to, the investors can say what they like about supporting diverse founders and diverse companies and whatever. Ultimately, they're mostly straight white male guys. And they have to show a return to their LPs, right? And in order to show a return to their LPs, they want to be investing in big and growing markets. And if you can say, hey, this market is big now, but it is growing X% year on year or month on month, whatever it happens to be, as people feel more comfortable being themselves in the 21st century. And, so it's a growing market. We're focused on a specific niche of it that has cash to spare. And we're growing X, Y, and Z, and but this is why it's important as well. I think understand who you're pitching to and what their concerns are going to be, despite what they say in their public personas, and you should be fine.
Awesome. Because you work with Lavender, it'd be great to follow up if you
yeah, of course. Yeah.
Great. Thank you so much. This was so good. There were so many actionable and tactical tips that you gave during the session, so appreciate it. And if you wouldn't mind sharing a little bit about the AWS credits that we have available.
Of course. I mean, that's really why we're here, right? So because you guys are part of Hotbed, we're working with Purdy and MA, and every one of you guys I think has access to, I think it's $10,000 in AWS credits. Those credits last for 2 years. Sign up for them, otherwise my boss shouts at me. So if you enjoyed this talk and you don't want to use them, just sign up, because otherwise my boss will be really mean to me. I think Purdy and Amy will be able to share the code with you. Basically, you just go in, fill in the form, put in the code, and then you get access to these credits. It helps you build your product on AWS without having to worry about spending for those first couple of years. Whilst you're obviously kind of building out your MVP and your betas and your alphas. What I would say is that's not the upper limit of credits. That is what you get for being Hotbed, because Hotbed is super early stage focused. As you grow, maybe you go through a Techstars or a YC, or you get kind of Series A or C plus investment. You will be able to top up those credits over time. But it's about using those credits while you're very early and not going to be spending a lot. You don't want to be spending any money on kind of paying for your servers and stuff like that. And obviously AWS has the products and services no matter what you're building to be able to build on us. And if you are interested in coming to any of the technical discussions we have loads. Just check out the AWS group. I think it's just AWS EMEA Loft, and it's like a bunch of online courses, whether you're building a marketplace, whether you're building a B2C app, or something kind of hardcore AI ML.
We'll link that in the newsletter that we send out at the end of the day. So if anybody wants to have a look at the courses, we'll link it for you, as we will with this talk. And yeah, Richard, if you can send over that presentation to us, then we will attach that to the email to everyone as well.
I feel like calling that presentation is bigging up. It's only 4 slides.
Slides.
Yeah.
Cool. Thank you so
Thank
much.
you
And
Thank you.
for everyone else, we'll see you on. Yeah, we'll see you
Thanks, Richard.
Thursday. Thanks,
Yeah, I'll
Richard.
see you Thursday. Bye everyone. Thanks.
Bye.
Thank you.
Thank you.
Hey, Paddy. Still there?